Good afternoon, traders. This is Christian Farmers, Tropic Trade Group, and this is your end of day recap for Friday the 26th. Sorry, I'm fumbling with a couple different systems here, and it's always funny when I forget I have the mic on. So, in any event, I hope your week was good. I hope you guys hope everybody had a strong week, and I wanted to go through and kind of review today's price action. As well as what the week performance was, and some takeaways always from that, and and a little bit about how to trade these types of markets that we're dealing with. And I'll classify that in just a second. But before I do, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through, of course, in this video is for information purposes only. So to start off with, this is the day's performance, and kind of interesting when you kind of look at what outperformed today, because I think you kind of had that a little bit of a theme of that and of what performed well this week. So, this point was a little bit different. The cryptos were strong. They finally got that bounce, after this the Bitcoin ETF shenanigans of, really what we saw was kind of the old buy the rumor, sell the news, which happens again and again in trading. It's one of those lessons that you learn. It's probably been since markets were around, always, you buy the hype and you sell the actual event or sell the news. But from a technical aspect, we broke down and took out this version point of control. I mentioned a lot with the version point of controls that these are overhead supply when they're above, and there are possible demand areas when you get back down there, right? A lot of volume occurring at this period. You can see the volume profile here and the point of control from this period and how price has not passed through it since, right? So there's buyers down there, and the MarketWebs indicator doing a great job at telling us that. By the way, we will have this on TradingView hopefully next week for public subscription. So I will come out with more information about that when we're ready to go. But that was your best performing area. So that did not get back above its 50-day moving average, but one hell of a bounce, and if you were, positioning into this thing around that version point of control, then maybe you're trimming into a day like this where it was up 5.9%. Let's talk about the indices just for a minute, and we'll talk about some of the events for next week, because we've got a big week of events next week. So I will review that as well. But here we are for your S&P. Things I thought this week was a little bit difficult. Number one, because I had some personal issues. I was sick this week, and I wasn't in my office, so I kind of struggled with some personal issues. And I know, like, this cold or flu kind of thing has been going around, and it's not fun when you get it. And of course, the best thing that you could do when you are not feeling well and with these situations is just get rest. And sometimes that's hard to do when you're a trader. So in any event, besides that, I just thought the way that this market was functioning was a little bit difficult. Meaning, I think most days this week we kind of gapped up a little bit, or we got off to a good start, and then it was met with some selling. It felt like some systematic selling. I don't know if it's that CTA selling. I don't know if that's a little bit of option gamma and things like that weren't there anymore, because last Friday was monthly options expiration. A lot of those January options expirations where a lot of leaps expire, so that removes a lot of the underlying bid that can be in the market when the market starts to move up, and you've got that gamma effect. So probably a couple different factors in there, but this is what I'm referring to. Just to kind of look at the price action just all over the place. Like, when you start up like this, and by the way, like, the majority of the money is made when you buy the close and when you sell the open, right? There's you could go through and you can Google that, but there's a lot of studies that are out there versus trying to buy the open and sell the close. Like, on average, I think that strategy of buying the open and selling the close, like, over 30 years, like, it is returned like 8 to 10% or something like that, versus the other way, buying buying the close and selling the open has returned, I don't know, like, and I'm making this number up, but it's like 400 or 500%. So it is a much bigger and better approach to be buying the close and selling the open over time, right? Now, of course, there are some things that happen in the after hours that freak people out, and you have one or two bad experiences, and from a psychological standpoint, you remember those bad experiences. But on average, that's where the money is made, is in the overnight market. Now, so why do I bring that up right now? Because that's kind of the week that we had. It was a little bit more dramatic. Now, it was also compounded by, a little bit of buying there in the first couple hours. Like, this was obviously the reversal day that we had was on Wednesday, but it happened just about every day this week where we moved up like this, and then all of a sudden it was like, a decent move down on this day, Wednesday. But it was the same thing with Thursday, and a little bit here too with Friday. Today we had the PCE numbers, and we kind of looked like this was going very well, but you kind of had to have in the back of your mind, how many times are you going to get fooled by this? And and there you go, like right at 12 o'clock, which is a weird time. I know some people think that it's the European close and so forth, but I don't think people really make that many decisions here, unless there's something big going on in Europe. It's, it used to be, people used to remember that all the time when there was the Brexit and the Grexit, when Europe was really weighing a lot on US markets, but that's not the situation that you have today. But regardless, it seemed to be really happening. Not every time that was the same this week, but it was around like between 12 and 1:30 where we just got hit with selling. So it kind of feels like the market's a little bit exhausted to the upside. And when you think about it logically, when you have a big week of events, so I'll talk about this now. When you have a big week of events next week, people don't really want to add risk, and they might be lightening up a little bit. Right. And if there is some program selling that happened, like CTA selling, right, the buyers are just not there to support it because no one really wants to make a big call ahead of, we have the Fed decision next week, right, which was Wednesday. They're not expecting anything in terms of if there's going to be any rate movement next week. That will be a non-event. However, what people will be focusing on it, which is the press conference, and what if Powell's going to really say anything that will determine whether or not they're going to go ahead and cut rates in March, or if they're not ready to. Notice that the expectations have come down pretty decently. Go back, if you rewind and go back a couple of weeks ago, there was about a high 60-70% chance that they were going to cut, that Fed fund futures were pricing in anyway, a cut of 25 basis points for the month of March. That has slipped back down to 48%, and May has really picked up in terms of when there's a higher probability of a cut. Now, this is all hearsay, and this will move again based on what Powell says. I'm not really going to go into details about. We'll talk about the Fed meeting next week, but I don't know what he's going to say. I know that we're not at their inflation target. So, when we've heard from various different Fed speakers that have said at some point that, maybe later in the year, they might be cutting interest rates, but they don't seem to be ready to do that right this second. So we're going to get obviously more data that's going to come out. So we're going to get another CPI report. We're going to get, a whole bunch of other economic reports that come out way before this March data that comes out, or at least I think 2 CPI reports. So, they'll have plenty of time. I don't think that they really want to say anything, but like I said, I'm not going to go too much further into the Fed meeting. I think what will be more important than the Fed meeting next week is all the earnings reports that we're going to get. Right, we've already had a decent amount come out this week, and some interesting effects, but you're going to get really the big components in the indices. So, for example, I'm just going to bring up the Qs and the components in the Qs, and you could see for next week what you have on tap. Right, you've got Microsoft, you've got Google, Starbucks will be interesting too, Qualcomm will be interesting too, but you're going to get Apple, Meta, and Amazon. So you're going to get the heavy hitters. next week. Those are the big guys that are going to be reporting earnings. And if you think about it from a fund manager standpoint, and AMD's in there too, by the way, which I view as much more important than Intel. But that's besides the fact. So if you're a big fund manager, you probably want to listen to what some of the biggest names in the indices are going to have to say about their earnings quarter and what their guidance is going to be, right? And that's usually the case. I think often we kind of chop around a little bit before all these big results come out, and then we'll start to see possibly some separation, right? I say a lot in these videos, and I say this to members a lot about how much this will influence your trading, or at least my trading decisions over the next quarter, right? You're going to find some names that are going to have to be accumulated, right? And that's where you can really find some leaders for the next quarter, right? Those outperformers that those names that really executed well, companies that really executed well, and that funds are going to want to own, right? And that's the situation, right? And you could see that right now in Netflix, for example, right? Why do you think? So this is always the funny thing, and people always think when a name goes down, right, it's a good buying opportunity. Now that may very well be the case, but not in the near term usually. So usually, like, okay, 6 months out or a year out, like if you bought the dip in, let's say, Tesla, like they're probably going to work it out, over time. Is it going to be a good trading opportunity for the next couple months? Probably not so much, right? Because it's usually the earnings that set the precedence for how the company's going to perform over the next quarter, right? Now take a look at what Netflix has done since they reported earnings, right? Would you rather own Netflix or Tesla? After they reported earnings, right? If not even talking about what they did on earnings, like going forward, right? And so far, you could kind of see now Tesla only has one day, right, of where they reported, but we'll bring up the stats, right? So oops. So again, we only have one data point, right? Which is, so it was up today. Great. It was up 0.3 of a percentage point. So it actually bounced a little bit today after a 12% decline. But that's regardless. Forget about the 12% decline, right? It's just setting the precedence, right? Look at the difference between what Netflix has done, right? If you thought like, oh, you missed it, it went up 10% on Wednesday, right? Oh, geez, I missed Netflix. I don't own any. Well, look at what it's done since. It's up another 3.2% or 3.1% on Thursday, and today up another 1.5%. Right? So look at the difference. So people always think, oh, I can't buy it up here, right? It's the fact is that there's funds that didn't have enough of a position in Netflix on earnings, and they're buying it now. And you don't have to think that you're going to have to, you need to own Netflix for like the next 5 years, right? You just think it right now, it's a trading opportunity, right? And if it comes in, and this is what happens with names that pump out a really good quarter, is that the whole company, the whole stock changes, changes its personality, right? It becomes a whole different thing. Right. And right now it's leading, considering, what the Qs did today. It heavily outperformed for the day. All right. So this is just one example, but you're going to find more and more of these names. Can I tell you which ones are going to be the stars? No, I can't. But I think, going after them, after the fact, I think is going to be interesting. And this happens over and over and over. And there's a lot of lessons to be learned. Let me just go back to the performance for the day. Crude, I think, was, really interesting. It kind of dipped intraday, but it closed back at the highs. And, if you look at the performance for the week, which I'm just going to go through with you guys too, a little bit different to see energy outperforming and up, and XLE was up over 5%. OIH was up 6.3%. We certainly talked about a couple names, and I kind of moved around my TTG trend portfolio a little bit. I owned, I think, 2 energy names, and I added one, excuse me, and I added one this week, which was PSX, which is my favorite in the group, right? But this kind of looks like a tech stock breaking out, right? Really nice performance. This was up 1.9% today, so it did well. And So I'm not going to go through a ton of charts in this video, but I think it makes sense. I talked about in yesterday's video that we could see some reversion to the mean, some profit taking in some of the areas that are really extended, like the semiconductors and like some of the software names and so forth, and the cyber names. Let these cyber names come in, right? But I think, Intel is not a leader in the semi space. I think overall, the semis were just looking for an excuse to kind of come in a little bit, super overbought. Look at how far the 20-day moving average is away from the semiconductors. So let this catch up, right? And you might find some trading opportunities. We were talking about CrowdStrike today in the trading room. I do a Q&A every Friday at 1 o'clock. And if you look back, right, and so first of all, you could see where this is versus the 20-day moving average, right? It's a bit extended, right? Notice the last time, which was in the beginning of this month, where price came in and went down to the 20-day moving average. Look at what happened to the price thereafter, right? That was your trading opportunity. So here is kind of the place to be kind of trimming, and let this kind of come in a little bit, I think anyway, right? And I still have a position in the TTG trend portfolio that I don't touch. Unless it gets really extended, and then I trim some. But same thing with Palo Alto, right? Palo Alto really dipped. It actually got me because it fell below its 20-day moving average here. But if it comes back into the 20-day moving average again, I would be a buyer. So in the meantime, this market's, I think, doing fairly well. To see that once some of these names come in like this and the semis come in, other areas are outperforming, like we saw in the energy stocks this week, right? And kind of coming back from some some levels that were probably oversold in that. So I view that as a pretty constructive market for the time being. I think also, as I mentioned about these gap ups and so forth, sometimes it's easier just to kind of have some exposure and not try to trade, and time the market perfectly, every single day. Sometimes, when when we're seeing more things advancing versus declining, excuse me, then it is an easier market to trade on a day-to-day basis, right? And this is where we are here. Sorry, I bring this up quite a bit. Right, the McClellan summation index, which basically tells you if there's more things advancing versus declining. And we've had since the end of December a declining situation, right? So it's been more of a difficult time to trade because more things are going down versus going up. So this might flip again, right? And then you could put your trader's hat back on and kind of go crazy. But what I try to do in these situations is really adjust to the market circumstances, right? And not trade that much while the environment is a little bit more difficult, which it is right now. All right, guys, so that's just a quick summary. I could go through a couple trades, but I'll do that over the weekend. I'll talk about my best trades and my worst trades. But as I mentioned, for me, it was just kind of on a personal front, being a little bit sick this week. It was difficult, but I think that there was a lot of stops and starts in certain names. I even tried to trade a firm a couple times this week, right? That name was difficult. But there were some names that actually, did pretty well. Airbnb, which was really surprising. I didn't trade this today. We talked about it in the room, but that's a nice break of the value area. It's something that we really haven't seen too much strength. Look at the volume today in Airbnb. And yesterday it was Uber, that was really strong yesterday. And so there are, names that you can find, but I think that you kind of have to be selective given the overall landscape of the market. I traded Costco today. Costco's is usually not a big mover, but I just thought that the opportunity, the dip opportunity in Costco made sense to me, and this trade worked for me. So until we kind of get through earnings season and some other events, you might continue to see the price action that we have. So the main thing is, try to adjust to that. All right, guys, that is it for the going into the weekend video, or the weekly recap. Have a great weekend, and hope to see you at the Tribeca Trade Group trading room. Have a great night, everybody.